This is not a drill. BlackRock, the most powerful asset manager on the planet, just dropped a bombshell. Whether you hold XRP, XLM, XDC, or you're just crypto curious, what they just hinted at could change everything. We're not talking about a minor upgrade to the financial system. We're talking about a complete transformation, a seismic shift in the way value is stored, moved, and settled across borders and between institutions. This is the dawn of a new financial era, and XRP is positioned at the heart of it. The $600 trillion derivatives market is not just another number. It's a vast, complex web of financial instruments, options, futures, credit default swaps, interest rate swaps that underpin the modern economy. Nearly every major institution relies on these contracts to manage risk, price and uncertainty, or leverage capital. The global economy cannot function without derivatives. Yet the very infrastructure that clears and settles these instruments is dangerously outdated. It's slow, expensive, fragmented, and prone to systemic risk. BlackRock knows this, and they see blockchain as a solution, not just any blockchain, but one capable of meeting the demands of trillions in daily settlement. This isn't about retail speculation. It's about solving foundational inefficiencies that cost the global financial system billions annually. Ripple, XRP, and the infrastructure BlackRock needs. Behind closed doors, BlackRock has been quietly exploring tokenization, not in theory but in practice. This isn't just a boardroom conversation anymore. It's real. They've been initiating trials, running closed-loop systems with selected financial partners, acquiring fintech startups that specialize in custody and smart contracts, and forming alliances with blockchain-native firms. Their goal is simple: full-spectrum tokenization of traditional assets, from equities to bonds, from commodities to real estate. Why? Because tokenization isn't just a buzzword. It's the solution to one of finance's biggest inefficiencies: speed. Right now, capital moves through outdated pipes. Settlement times for securities can take days. Cross-border transfers take even longer. And the costs? Astronomical. Tokenization allows you to create a digital twin of any asset and move it like email. And for that kind of seamless, borderless value exchange to happen, you need a blockchain with ultra-low latency, near-zero fees, and the ability to integrate with existing financial infrastructure. You need the XRP Ledger. Larry Fink, the man at the helm of BlackRock, has said it himself: tokenization is the next generation for markets. That's not a casual forecast. That's a strategic declaration. When someone who controls more than $10 trillion in assets makes that call, it echoes through every boardroom on Wall Street. But here's the thing: BlackRock doesn't want to reinvent the wheel. They want to plug into infrastructure that already works. Infrastructure that is already licensed, tested, and operational at a global scale. That's where Ripple enters the picture. Ripple has spent over a decade laying down the digital pipes for global value transfer. This isn't a startup hoping to land its first deal. This is a firm with more than 300 institutional clients, central banks, commercial banks, and payment providers. Ripple has enterprise-grade software that is being used right now to settle billions in value. They're not just present in the U.S. They've built corridors from Southeast Asia to Africa, from Latin America to the Middle East. They've embedded their on-demand liquidity, ODL, system into the backbone of banking in regions where traditional SWIFT rails fall short. And these aren't theoretical partnerships. These are active use cases powering real financial traffic. And central to this entire operation is XRP. XRP isn't just a token. It's the lubricant of this entire ecosystem. It's the bridge that connects fragmented pools of liquidity. It's designed to move value instantly, regardless of currency pair, regardless of geography. It can convert USD to Euro or JPY to INR in seconds with finality. And it does it without needing a pre-funded Nostro account, cutting costs for institutions by as much as 60 to 80%. Unlike proof-of-work chains that suffer from scalability issues, the XRP Ledger was purpose-built for high-throughput financial transactions. It can settle up to 1,500 transactions per second, with sub-second confirmation times. Fees are fractions of a cent. And because every transaction burns a tiny amount of XRP, the supply is deflationary over time, something institutional players like BlackRock are watching closely. But beyond the tech specs, XRP's real power lies in its neutrality. It's not tied to any single nation, central bank, or political body. That makes it the ideal tool for cross-border transactions in a politically fragmented world. It's the Switzerland of digital assets, neutral, fast, and built for interoperability. That's why Ripple doesn't position XRP as a competitor to fiat, but as a connector, a bridge. XRP isn't here to destroy the old system. It's here to optimize it, streamline it, and bring it into the digital age. BlackRock doesn't just need this infrastructure, they need it now. Because as global markets fragment under geopolitical tensions, and as traditional systems buckle under the weight of inefficiency, they must turn to the only option that's fast, compliant, and already deployed. Ripple's tech is that option. XRP is the key that unlocks it. This isn't about waiting for the future. The rails are live. The corridors are open. The only thing left is a capital, and BlackRock is ready to flood the system. That's why every crypto investor, every finance professional, and every policymaker should be paying attention, because Ripple and XRP are no longer the underdogs in a crowded space. They're the core infrastructure players in a rapidly digitizing world. And they're exactly what BlackRock and the rest of the financial elite need to make tokenization a global reality. ISO 20022 regulation and the Ripple legal smokescreen. Now let's zoom in on ISO 20022, the new global messaging standard reshaping how money moves around the world. ISO 20022 is not just an upgrade. It's a complete overhaul of the language used by financial institutions. Over 90% of the world's banks are migrating to this format. It offers more structured data, greater transparency, and the ability to embed critical metadata directly into payment messages. That means payments don't just move, they speak. They carry context, detail, compliance data, and instructions in a way that's never been possible before. This isn't just good for banks. It's essential for a future dominated by automation, AI, and real-time settlement. The old system, Swift MT messages, was built decades ago for a world that didn't include machine learning, programmable money, or blockchain. ISO 20022 is built for that future. Now here's the kicker. The XRP Ledger is natively ISO 20022 compliant, not retrofitted, not dependent on third-party integration. Native. This means XRP can speak the same language as global banks and financial systems out of the box. While Ethereum and Bitcoin are still figuring out scalability, XRP is already aligned with the next generation of financial messaging. And here's why that matters. Because interoperability is no longer optional. In a world where every central bank is moving toward CBDCs and every institution is digitizing assets, the ability to plug into existing infrastructure and speak the same financial language is what separates a protocol from a true global utility. And Ripple saw this years before anyone else. While the crypto space was dominated by hype cycles and pump-and-dump schemes, Ripple was playing the long game. They weren't chasing retail investors. They were sitting in rooms with central banks, regulatory bodies, and legacy financial institutions, laying the foundation for what comes next. Ripple secured key licenses in Singapore, the UK, and the EU. They built corridors in regions with fast-growing economies and poor banking infrastructure, because that's where the need is greatest. They opened offices not for branding, but for compliance. Real, hands-on regulatory relationships that cleared the way for global expansion. While retail speculators laughed or ignored XRP, Ripple became the most regulatory-friendly crypto company on the planet. And all the while, the U.S. dragged Ripple through a multi-year legal battle with the SEC. But let's be clear, the Ripple versus SEC lawsuit was never just about whether XRP is a security. It was about time. It was about stalling Ripple's U.S. momentum while global standards were finalized. Think about it. Why did Ripple continue expanding aggressively overseas during the litigation? Why did they keep closing deals, building infrastructure, and publishing progress reports? Because they knew the end game. The lawsuit, in retrospect, served as a strategic smokescreen. While media headlines focus on courtroom drama, Ripple quietly positioned itself as the only blockchain firm with true global regulatory alignment. And when the smoke clears, as it now has in many regions, Ripple is left standing as one of the few players truly ready to operate at scale. It's no coincidence that ISO 20022 adoption aligns almost perfectly with Ripple's global rollout timeline. The rails are merging. The messaging standard is going live. The banks are ready. And Ripple has been ready. In fact, some argue Ripple helped shape the way ISO 20022 has been interpreted by financial institutions in the blockchain era. Ripple's own white papers, research, and participation in central bank working groups have directly influenced how tokenized assets and blockchain settlements are being viewed by regulators. And XRP is the native asset of that vision, not an add-on, not a workaround, but the heart of a system built to move value in the language of the new financial era. That's why when BlackRock looks for compliance-ready infrastructure, they see XRP. That's why central banks keep referencing Ripple's tech. That's why institutions aren't just interested. They're quietly preparing to integrate, because XRP is already speaking the language the future requires. FedNow, global coordination, and BlackRock's real play. Now the world is catching up. The Bank for International Settlements is calling for tokenized money. The World Bank is highlighting Ripple's infrastructure in official documentation. The International Monetary Fund is exploring cross-border payment solutions with real-time settlement. And all the while, BlackRock is watching. This isn't theory. It's a roadmap, a coordinated transition from legacy rails to a digital-first infrastructure where blockchain is a backbone, and assets like XRP provide the fluidity to make the system work. Enter FedNow, the real-time payment system from the U.S. Federal Reserve. On the surface, FedNow doesn't use XRP, but the overlap is striking. Ripple is a member of the Faster Payments Task Force. Key FedNow partners are also RippleNet customers, and Ripple's technology is referenced in documentation related to instant settlement systems. Think of it like this. FedNow handles domestic real-time transfers. Ripple and XRP handle international liquidity and conversion. Together, they form a full-stack solution for the real-time Internet of Value. And where does BlackRock fit in? They don't want to run the infrastructure. They want to operate above it, controlling the flows, offering investment products, managing tokenized portfolios, and capturing yield from digital securities. XRP allows them to do that across borders without friction. Utility, scarcity, and the XRP opportunity. Now let's talk about numbers. If XRP were to capture even 0.5% of global settlement volume across payments, securities, derivatives, that could represent tens of trillions in annual flow. And with a fixed supply of 100 billion tokens, the impact on price would be enormous. Unlike fiat, XRP has no central bank printing more supply, and every transaction burns a tiny amount of XRP, making it a deflationary asset over time. As demand increases, so does scarcity. That's economic gravity. Let's be conservative. Say XRP facilitates $5 trillion annually at a transaction fee of just 0.001%. That's $50 million in value captured annually. Now imagine that fee spread across a diminishing supply as token burn accumulates and institutions continue to onboard. The economics shift dramatically in favor of long-term price appreciation. And remember, this doesn't include speculative buying. This is just from utility. The conclusion is hard to ignore. XRP is not just another coin. It's a settlement protocol, a bridge, a layer of financial communication that's being baked into the next generation of global finance. So what you do now, you stay alert. You follow the infrastructure. You study what BlackRock, the IMF, the BIS, and Ripple are building, not what they're tweeting. This is not a market cycle. It's a transformation, a migration to a global financial grid that is faster, cheaper, programmable, and inclusive. And XRP is not waiting for permission. It's already on the field. This is crypto stand. Stay sharp. Stay prepared. Stay positioned. Because the system is going live. And when it does, the world won't look the same.